Right, welcome back to another episode of A2 the show, guys. Today we have Brad Roars, who brings over 20 years of experience in residential and commercial real estate and is
Let's go.
recognized as an expert in luxury properties. He's helped buyers and sellers close more than $170 million in transactions. Two-time Best of Zillow Award winner in the DC metro area. Brad and his team are known for his outstanding client service and long-term support from the sale. And today we're going to also be talking about economics as well. So there was something that I kind of wanted to bring up, which I was thinking about just before we started recording, was so remember in the 2008 financial crisis where
I was
people could
there.
no longer afford the loans. Exactly. They could afford the loans on their mortgages. Um, Now with like property prices going up, are we going to be seeing something similar? Are
Probably
people
not.
not going to be able to afford their loans or their mortgages?
No, because they're going to bail it out a different way. Before, what happened in 2008 was there was a collapse in the secondary market, and there was adjustable rates. Right now, the banking system has been really smart, and what they know is that people can refinance the houses down the line. So as long as they realize if we keep people on fixed rate interest, we can push them right up to about 40-45% debt to income ratio. And at that level,
Woo.
people tend to be very stable in terms of their ability to repay loans. But they're never really going to get ahead. They'll never save money. So it's kind of like they got the right amount of squeeze going on right now. And that's why, for instance, if we're going to bring up Saudi Arabia, why is it that if we go into a Porsche dealership and I'm dressed like this and someone's dressed up in traditional Saudi attire, that the salesperson's going to go right to the Saudi guy every single time. They're not going to look at me. They're going to go to the Saudi guy. Why is that? Because it's a general understanding that even when people make a lot of money in America, that money is either going to real estate or it's going to taxes, and there's a very small amount that's left. So at this point, we have a savings rate that's just around 2%. So a
Oof.
person making $100,000 a year is saving about $2,000 of it. They've really got the balance perfect, where people feel that they're making a lot of money in America, and if you don't make a lot of money, where you're way above where costs could even come in, they've got it right at that equilibrium where the money comes in, the money goes out to the financial sector. If you step back from it without any morals or ethics, it's kind of beautiful how they did that. They've got everyone's money and they put them in cardboard houses. I love it.
And where does the moral and ethics come in?
Well, you would think as a society, right? You would want to enact policies that lead to people being wealthier so that they don't have to work as a household 85, 90 hours a day between a husband and wife, where
Mhm.
people aren't living just to pay for basic necessities. That's where, if you were like a really coming from a moral standpoint, that's probably a decision you would make. But what about if you come from a stakeholder standpoint and you think about stocks and the revenue to your company? I think the current system is perfect.
Okay, let's talk about debt, baby. Do I need debt? Should I stay away from it? You tell me.
Well, if you could avoid it, I believe you should have no debt. I am very much against debt, and the irony is that I own a mortgage company. I tell people I don't even like mortgages,
That is
but
ironic.
it ideally. But here's how they get you, right? If let's say you're in America, you want to have a house in a good school district. Well, unfortunately, those houses have been restricted. They have had decades of zoning restrictions. They're starting to do it in Saudi Arabia, so watch out, my fellow Saudis out there. But they've massively restricted basically affordable housing, and they've done that strategically because existing homeowners want their prices to go up. Everyone's in favor. I bought a house for 200, now it's worth $1 million. That sounds great, except when you price every single person out of the market. So if you wanted to come and work here in Washington D.C. and you wanted to have a family and a good school system, you're going to have to come up with either $800,000. If you got it, that's great. Or you're going to have to come up with a $4,000 a month allocation for your mortgage payment.
Wow. Okay. And since we're talking about that, I once heard that someone was able actually to use their, one of their debts to actually start a business. So how exactly do you play around with your debt? How do you manage your loans. And this person used their student loan as well on top of that. And when I hear people have student loans, they're usually, it's not going well for them because they have to pay it off, and it's not something that's easily paid off, especially when you first start your career. So how can you actually play around with your debt and your loans to like, you know, boost yourself and build
Yeah,
something?
sure. Yeah, so what's happening there if someone says, I used my student loans to start a business? The only way that would be possible is if you're taking the allowance that goes towards living expenses and housing expenses, instead of taking that money and put it towards what it was supposed to be put towards, if you were to redirect that to starting some kind of company, yeah, you could definitely do that. But there's way better ways, I think, to start a business. I don't think that starting a business in America is very capital intensive. I think that you could start realistically just by having a good source of customers, which is done through social media right now. I haven't really used, I have so many followers on social media. I haven't really monetized it. Maybe I should. But if I needed more business, I could just put something to the end of one of my videos and say, hey, by the way, I have this, and people would probably patronize me. In fact, as I'm sitting here on this podcast, I think I'm going to do it because more money is better.
True. But obviously, we also want to kind of present. So, since we're saying that more money is better, we also kind of want to add a certain value to it, because obviously there are people who look at people who say that in a negative fashion when they look at
Hmm.
money as with a negative connotation. So how do we maybe change that perspective for them, and then try to shed some light that having more money doesn't necessarily you're like selling your soul, or throwing your
Right? People love to hate
the
on
the, the
billionaires. People
best
love
part
to
of you
say
away.
billionaires are
Well,
evil and then we need to eat all the billionaires.
no,
So,
well, you have to contextualize everything, right? So a person who works constantly to pay for luxuries that aren't really luxuries, like you have a big expensive car, it becomes just a
mhm.
car over time. That can lead to them misallocating their time in terms of maximizing their happiness. However, there is a lot of caveats that go with that. Do you want your kid in a good school? Do you want to be debt free? Do you want to be able to have a chance at retirement? Whether you like it or not, you have to start a love affair with money. The opposite side of that is much worse, and I've been there.
And what does that look
Uh,
like? Yeah.
What it looks like, when you're starting a business, and even if your business is doing great on paper, but you can't take like the big distributions yet, and you're just having to pinch pennies on a personal level, it means that you walk around constantly with a state of stress. It means that
Mhm.
times when you should be happy, you're suddenly not happy. It means that the thought of the business permeates everything in your mind. Even it's 10 o'clock at night, you're thinking, oh man, will this contract pay out? And so, as quickly as possible, you have to get out of that position. Uh, get to a point where your lifestyle is well under the amount that you're bringing in. And then you could start to have some peace. And I think when people say, when we say stuff like, we need to make money, we got to bring money in. What we're really saying is we need the resources necessary so we can have peace, so we can have time with our family. And when we're with our family, we're not thinking what's going on with the bills over here.
okay. And so you said that you're also on the other side of the love money affair. I wanted to ask if you would be willing to share like a personal example from that time for yourself. Maybe a
So
bit of vulnerability, I would say.
yeah, well, let's talk about some of the worst times in my entire life. So we can go back to the financial crisis in 2008. And to give you some context, imagine, so I'm sitting there, I'm just a real estate person at the time, and you're about to get paid all of this money. And then you hear overnight, all the loans are being denied. That huge chunk you were expecting is no longer there. You're sitting in a big house. No one you know has money because everyone's getting laid off. And you're sitting there and you're thinking, you never really thought about the price of steak before. It's something you just don't think about when things are going good. And you start thinking, I really can't get the steak. Maybe I can get by with ground beef. Maybe I can make these sacrifices. Maybe we just don't eat out anymore. And suddenly your lifestyle has to completely change. And this can cascade into your personal relations with friends, with your significant other, and you are used to being like a provider. And now, because of forces outside of your control, you suddenly can't be that person anymore. And that is really difficult. And that leads to you questioning, like, am I actually smart? Am I good at what I'm doing? It just cascades. And when I say like we have to focus on our finances and we have to get ourselves secured, it's coming from a place of I know what the other side is. I know what it's like to worry about these things, and it crushes you spiritually. There was a book called The Republic. I believe that
Mm-hmm.
was Plato's Republic.
Mm-hmm.
And in the beginning of the scene, there is an argument between the young men, and they turn to the older fella to say, what good is all this money you had? And he replies that it gives me the ability to be a just human being.
Wow.
Because I don't have to make compromises. I can do what I think is morally right because I don't have the pressure of putting food on the plate. I don't have that. I could lose my house. So when you one of the what I think where I'm worried for America is as we squeeze people so much as a society that people are going to naturally have to make choices based solely on survival,
Mm-hmm.
not what's best for society, not what's best for their fellow countrymen or the best for the world.
And then once we're so focused on survival, then maybe morality comes out of the way, and we
No,
start doing things that we shouldn't do or wouldn't do if we had money, and that makes society awful as a whole. I totally believe in what you're saying in terms of like, yeah, we all need to strive for financial independence because it makes us better people having that in our pocket.
well, I think it allows you to be a better person. You can make a
Hmm.
lot of money. Go down to Miami. There's people with a lot of money and they're not very good people, and it does amplify that. I can't speak for Los Angeles, but
Hmm.
I'm sure you're all perfect people over there. Um, but yeah, it is a big concern of mine, like in terms of America. Even though if you look at our numbers, like you could say GDP is so high, income is so high, but what do people actually, what do they have right now? And when people have to make policy decisions, are they really going to look at what the best outcome is long term, or are they going to think, how do I survive?
That's what happens when you
So
don't have
now that
money. Hmm.
right,
Just
and
to
this
add to
is
that side, sorry for interrupting you once and twice now. We're gonna go one more time. Just
no,
kidding.
that's
One of my favorite solutions was UBI, Universal Basic Income, when Andrew Yang was running for president.
Hmm.
This was 2016, and I read his book, and I was like so inspired. I was like, wow, if we all have a little bit extra money, then so many things will be better. Like we'd be able to take care of our health, we'd be able to take care of our family, we'd be able to take like to not do crime or do things that are that people do out of desperation because of money, and so and we're making so much money, and so many people are making money right now in the US, especially like people involved in AI, and they're making money off of us because we're the product. They're mining our data and they're selling that off for money, and they're making
Hmm.
trillions, and we're not seeing any part of that. So I don't know. For me, UBI has always been a fantastic solution to this issue.
But I fundamentally, I agree with you that there should be a basic standard of living, but I would look at the structural issues that exist in society and give a very poignant example here. When America switched from one income households to two income households,
Hmm.
debt increased and savings rates went down. You would think it's the opposite. If you have two incomes, you should be twice as good. But
Right.
because there's structural issues, for instance, restrictions on affordable housing, regulatory capture of the healthcare industry, of all sorts of industries, my concern with universal basic income is even if we were to write people checks for $3,000 a month, no questions asked, how are they going to get squeezed? Is that money actually going to get to them? Because when we put women into the workforce and went to two income households, love women, great workers, and all that stuff. But when we did that, all that money that the women make all kind of was squeezed out of the American households. So if we don't solve that structural issue and we add another source of income, who says that's not going to happen to the UBI?
Oof. No, that's a great debate. Side, where do you side?
mm, It's very it's I think for me, I do side a bit on the UBI's perspective, mainly because I know what I would be using it for. I wouldn't necessarily, you know, it's just like it would give me that two. So, like you were saying, there's a two income household, right? But if for the single individuals who live by themselves, if you give them a UBI, for example, if you're focusing it on, for example, those individuals are still starting out in their career, or maybe single parent households as well. You're giving them that two income per household, which kind of adds to the value of those group of individuals. Because like if you're giving a family that already has two incomes in it and they're doing fine, they don't necessarily, maybe they don't fit in the requirement for the UBI. So I think it just goes back to the requirement list that applies to these individuals who will be receiving it, and if they fit the category and if they will be using it for the right sort, like the right kind. This can easily be analyzed and studied based on the spending, maybe the spending lifestyle of that individual or that family.
But again, the question is going to be is what is going to be the impact on the existing system? So, do real estate prices then increase because now people have more money and they're already putting about 40 to 45% of their income into a house? Then UBI, if it's structured without taking into account other metrics there, it becomes a de facto welfare for the financial industry. Because if all we do is we
Hmm.
push up the price of housing and they collect bigger mortgages on it, but we did address sort of this issue in America in the 1930s and the 1940s through the Army Corps of Engineers, but we did it a little bit differently. They enacted a whole bunch of mass construction of first-time household or housing for first-time people,
Hmm.
and they were able to do it because it was done at scale and it wasn't fancy. If you go outside of like Baltimore City, there's a whole bunch of these houses. They still exist out here. And because what it was doing, their mindset was coming out of the Great Depression and going through the war, is instead of giving people money, why don't we just create the housing, which is where their money would have gone anyway, but now we know it goes directly to them. The reason we can't do that right now is if we built houses like that, which are not terribly hard. We've been in development in Ghana. Building houses is fairly easy to do. Not to
Yeah.
be too cocky, but it's fairly easy to build really simple houses. They're basically sheds. They're sheds with an HVAC system. Um, if we were to do that, it would naturally drive down real estate prices. Now, here's the problem: if prices go down, the need for mortgages goes down, and the financial industry suffers. That's where we have sort of two competing forces, and the problem is who owns the mortgages, like who owns American mortgages, and it's the U.S. government. The U.S. government owns a great majority of the mortgages. So they benefit and they receive money from housing prices becoming less and less affordable. And so while it's very unpopular to call for higher
Yeah.
taxes to pay for things, if the government just simply buys all of the mortgages and people are putting 40% of their income into those mortgages, well, we've just taken the tax rate from 35% to 75% pretty quickly and no one knows any different.
Ooh. Yeah. And I would say to the US government, hey, if we're all educated and we're happy and we're all being productive members of society, then you can tax us and you'd make a lot more money than you would by, squeezing us. That's for sure. I'm pretty sure economists have studied all this and know that there is there's another option, for economic growth. Because right now, how is anyone supposed to start a business, or if they're too squeezed, if they're too busy thinking about the bills for the next day? How can you be creative and inventive and entrepreneurial?
Well, well, you can't, and it's also destroyed the banking industry over the last 7 years. So when the banking industry went from being the traditional banks you'd read about in an old novel to much more transactional, generating mortgages and financial products and then selling them to financial institutions or to the government, what ended up happening was like back in the 1950s, if you wanted to start a business, you could go to your local bank where you had a good relationship. You could get a loan. They would have a person there who knew business really well, could guide you on best practices, manage your cash flow. Every single one of those guys was fired by the 1980s.
Wow.
There's no, if you go down to any local branch for a bank in America, there is absolutely no business experience in that bank anymore. There's tellers, there's loan officers, there's personal bankers. There is no one who knows business. And so you have to rely really on your own cash. So this huge financial apparatus that we've built actually crowded out the type of lending that's necessary for small businesses to start. And it's
Wow.
was a from the banking standpoint, that was a much more profitable choice.
Yeah, but it's the death of the American dream to be able to be entrepreneurs and buy a house and have a family. I mean, that is what
Has the
America is about.
But has the parasite ever really cared about the host?
Oh, it is kind of crazy. So, Side, do you want to touch on this or um, move on?
I want to understand like what's the banking system's next steps if they're just systematically just like destroying the community within that's like kind of supporting them. What's the future for them?
Well, you can always project on these things as far as what their next plan would be. But right now, they've got a really nice system in place where it's the banking system is extraordinarily stable. They have captured
Hmm.
a great majority of the Americans' income, and there
Okay.
may or may not be more to squeeze. The only thing I could see that would go beyond that is if they started to own all of the assets, like they started to own the apartment buildings, if they started to own the new home developments, and then
Yeah.
people just had no chance of ownership. The reason I don't think they'll go down that route is when they own everything, if they were to own all the real estate, there is one sizable target. There's no human shield between them. But
Oof.
right now, the current system, if I was to come out and say, I want to build $100,000 houses around DC, and it would be so good for everyone, and all the young people are behind it, what about the existing homeowners? That would hurt their equity and all that money they're worth on paper. And see, the current
True.
system, they don't even need a lobby. If you want to stop affordable housing in America, you could just rely on the existing homeowners. They will protest. They'll do everything for you. And so I think there's ways they could get more money, but I think it comes with risk for the banks. And so I think when you have a good thing going, you stay with that good thing until it no longer works.
Oof.
So is there like a
So,
clash potentially with the developers and homeowners? Since obviously developers are constantly building, and if they're increasing the supply, then there'll be way more supply, so
Oh,
prices will just could decrease.
Oh, well, I think it's quite the opposite. I think developers, and as a person who's invested in development, we really do like the current system. And the reason for that is the more difficult it is to build houses, the more exclusionary and the more market protection that you have. If everyone could build a house, if you could just buy a piece of land, hire contractors, build a house. There's no space for the developers. There's no place to make profit. But when it's so
Hmm.
laborious, when there's so much red tape to go through, where it's actually better to be a lawyer than a contractor if you want to build houses. You definitely want to be a lawyer instead. It's much more efficient. Well, now instead of maybe making $10,000 to $20,000 a house, but because there's so much barrier to entry, that suddenly becomes $50,000 to $100,000. It becomes significantly more profitable. It's why in the banking industry, a lot of regulations are needlessly complex. It's not complex because the banks think it's good for securing the financial markets. It's good because it makes it hard for new banks to start. And you see
Hmm.
this across many, many industries where laws are made just to be difficult to protect the existing players that are within the ecosystem.
oof. So while Side looks it up, I'm a bit stuck right now. Should we buy or should we rent? Because I see it both ways, and I see the cons of both. Like, I know that owning property or a car or anything is it's yours, and no one can take it from you, and you own it, and you don't have to pay all these extra fees, and no one can come in and raise your rent. um Versus, but the cons are that the interest rates are way too high, the cost of it is way too high, you don't have that much freedom, you're kind of stuck in a spot, and like if something breaks, you're the one responsible to fix it, while I'm renting right now. I pay a set amount every single month. No matter what happens, they come in and fix it. And I feel like I have that extra income that I can leverage and put into other places, that will see my money directly grow more. But then I don't own anything if I'm just renting my whole life, and then I, you know, don't show up with anything. So it's where we're kind of stuck.
So I own 17 units right now.
Okay.
And what's interesting is that the typical tenant that we have puts about one third of their household income into that property.
Right.
It's almost the same right across the board. So if we look at a percentage of income analysis,
Mm-hmm.
right? For every three houses you own, you get an entire household's income. So from the landlord's perspective, it's very, very nice to own property. That's
Mm-hmm.
a wonderful thing to have.
Of course.
I personally own, and I probably own a smaller house than I otherwise could, but I was able to pay it off and not
Mm-hmm.
have any mortgage debt. The the reason I'd say if you're in a really good economic zone, relatively speaking, Los Angeles would be one, Seattle, Washington D.C. I think it's better just to set what your monthly payment is right now. Have the ability to pay it off as you go up your career path, and then eventually they can only hit you up for property taxes and insurance. So I would say when it's feasible, own the property, pay it off. Don't think it's going to make you a millionaire. Even if your house goes from $500,000 to $2 million, you really never get that money because the only way you get that money is you sell your house and you're not going to live in a tent. So real estate equity is kind of fake wealth, in my opinion, if you're a homeowner.
Mm-hmm.
In fact, if you were to take for the median homeowner in America, it's between 85 and 90% of their net worth that's reported by the Federal Reserve is in their primary residence. So when an American thinks that they're worth $400,000, they're really, if you look at the numbers, they're only worth $40,000. And they say, no, 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 no. I have a house, and I say, okay, can you spend your house? The only way you
Yes.
get that, you can either sell it and live on the street, or you come to me for a mortgage.
I feel that the same way about like collectors and stuff like that too, because there's tons of collectors out there that are out there, they're hunting to collect things. And I'm a fan of like vinyl records, for example, right? So behind me I have like a beautiful vinyl record, and I could say that it's worth $500 or something, right? But
Right.
at the end of the day, if no one's gonna spend that money to buy it, then it's not really worth anything more than the 30-40 bucks, if that's all they're willing to spend to buy it. So that's where it feels like it's fake money owning things that have a price, but then when you try to sell it, it doesn't really come across that way. And I see the same thing with
What's
real estate.
What's interesting with this, because people love their fake money. They love to hear that they're millionaires, right? Even if they could never get that money. But what's interesting is when you enact policies that drive up the
Hmm.
price of housing. Let's say that you are completely debt free. You had the cash, you bought it with cash, so all this mortgage and all this stuff doesn't really affect you, but it does. Because and I've seen this in my own business. Every person that you need for a service, whether it's a doctor, mechanic, lawyer, whatever, whether it's your employees, the cost of the housing in that area is a big part of why they have to charge what they're charging. So if you wanted to hire a worker here in Washington, D.C., if I want to get a
Hmm.
good professional, they're going to need about a $4,000 a month mortgage payment, which is going to be about 40% of their income. Meaning, if we reverse engineer it, I have to be paying $100,000 to get a worker who would come here. Otherwise, they couldn't, you can't hire them. There's no place for them.
Hmm.
So if the housing was, say, $100,000, that same employee would be available for $50,000, which would then, of course, increase our bottom line if we could get workers for a more affordable price. And that's why, if you look at American companies right now, there's been such a huge push to offshore as many white collar jobs as possible. I could take you in my office building. There was an accounting firm that took up half of a floor, so about 10,000 square feet. They switched over to a Philippine based accounting firm. Why is that? It was about 15% the price for the same exact workers. They had to keep a few people on for compliance, but they just shoved them in a corner somewhere else in the building. So the real estate prices, even if you think that you've won the game and you've got all this money on paper, you're really paying for it indirectly. And Americans,
Mm-hmm.
I guess they just don't think that way. And the best thing that we can do, really, from a business standpoint, is I can't change the world. I will look at what the rules are to the game. I know that there's probably not going to be more houses built, so I'll buy as many of those houses as I can. I'll charge as much rent as I can, and when I need to hire white collar workers, I'll just get them out of the country. It's
Oh,
easy.
wow.
I mean, that's insane. Like how so the U.S. society is basically just built on what you have on paper, basic, and
Yeah,
how much you inflate the price,
yeah,
and they just buy that. They just live by that. That's how they think. Like we are millionaires, even if they're not even close to that number.
right.
Uh, I mean, so is the American dream at this point now just you like a person just finding a way to inflate their numbers, like
Well,
magically
I
adding an extra zero behind their paycheck?
yeah, I mean, everyone has their own dream, right? And we're at this point, I don't really know that everyone has close to the same goals. For myself personally, my version of the American dream was to be debt free, own a lot of property, and then continue to
Hmm.
grow my business so that I can take care of my family. Um, I can't solve the world's problems. What am I going to do? Run for
That's true.
president? So
That's an
eventually
idea.
what
There we go.
what we'll do, because I'm still dealing with the cost of living just being here by proxy, is we're going to find a nice place in a warm climate where we could relax on the beach and we can let our investments and our businesses take care of everything. That's really my American dream, I guess technically, is to leave America. That's my American dream. And I like America. I like America. I like America, but it's the idea is to have that like freedom, right?
Yeah.
And
Of course.
realistically, am I going to be able to have the same freedom that I might have had now or 10 years ago, regardless of where I go, financially? Maybe I'll do great, maybe not, who knows, right? But
Hmm.
I can pretty much guarantee myself that there's more than a few places like you can look at the Mediterranean, you look at Ghana where I've developed properties with our partners. The There's so many different places right now, and I don't think we have to be geographically limited like we have been in the past.
Hmm.
Right. And how does that affect the global trade? Because we have countries that are, developing in their own way. You mentioned Ghana. There's a lot of development happening there. There's also obviously here in the Middle East with the Gulf countries also having
Hmm.
a surge in construction developing and multiple other industries. So what does this do to the US as now with the Canada as well saying that there's no longer U.S. hegemony. The the Canadian Prime Minister came out the other day saying that. How does this affect the U.S.? Where does this put them, as a globally trade mark, like a center of
Yeah,
trade?
so I can look at it from much more of a micro level and just thinking this through logically. As the rest of the world starts to develop, and as America kind of stalls out on an individual level because of just the debt load that people are under, what I think that we're going to end up seeing is there's going to be more competition for global goods. Whereas if we go back 50 years, the American dollar was strong. If you wanted to do a value added product, where are you going to sell it? You're going to sell it to America. So America always had really access to the best stuff. And
Hmm.
that's why, like, even like Italy, like the car companies like Ferrari, they had to really cater to Americans because that's where you would have to sell things to. I think what you'll see in more of a globally homogenous economic world is that I don't think Americans are going to have the same leverage that they did in the past on an individual
Yeah.
purchasing power basis. However, I think the prime minister is a little bit silly to say the U.S. hegemony is over. Uh, I think recent events can kind of show that if America could do one thing right, it's enforce their hegemony.
That's a good point.
That's a very good point. Also, since we're inferring about that topic, well, what do you think is Trump's next framework or deal for Greenland? Because he's tried obviously purchasing citizens from Greenland by offering them between $10,000 to $100,000 per citizen. They
Hmm.
said no, thank you. Uh, Now he apparently has a new deal that he's gonna propose soon. Like, what do
So,
you think is in his mind? This
oh, he's a real estate guy. I'm a real estate guy. I can tell you what
exactly.
exactly what he's thinking. I can tell you what he's thinking. You come through in any negotiation, you go and you just make kind of like crazy demands. This is so basic real estate. You come through, you make a bunch of demands, you force the other
Yeah.
side to expose themselves, and
Mm.
then you begin the real negotiation. And you always want to conceal what you really want. Now, does he want to have military bases? Does he just want to renegotiate another deal over here and use Greenland as leverage on it? That is, something I am not privy to. But the tactics and strategy are these are traditional land developer strategies. You go through with a crazy ask. So, for instance, when he was pushing the Greenland deal, certain countries in the European Union responded by saying, if you do this, this will be our response. Well, what they did was they revealed their hand and they said, for anything you do in the future, this is what we have on the table as a threat. Now you can strategically navigate around that. And so it's the same way, like if
Mm.
we're negotiating the purchase of a property, let's say you had a bunch of land, and I might say to you that I will purchase it, but I need to close on it 1 year in the future, and I'm going to offer you this low price. And this is a very simplistic version, but this is the tactic we all use. They're going to come back hard on one of those things. They'll say, they'll I absolutely cannot wait until next year to sell it. You're not serious if it takes you a year to put your money together. Of course, the guy wanted to buy it in 30 days. He said the year so he could know that when he comes back and says, "Oh, I can come to 30 days, but I'm going to be real aggressive on the price." These are negotiating tactics, and it's interesting. It's interesting. Like different fields have different ways to go about it. And when I see what Trump does, it's like people like they don't really understand it because they're not in our industry. But I'm like, yeah, this is basic. I saw this a mile away.
The art of the deal is what they call it. I have a question about, like, let's say someone just happened upon $20,000 or $50,000 in cash. Let's say, what should you put that money into? Is like, because definitely just leaving the money in a bank account with inflation, I don't know. That seems like not very safe. But then do you just put it in like and this is not financial advice, but just strategy. So is it like, do you put it in like what they call like a investment, like an S&P 500 account or crypto, or should you buy gold or should you buy jewelry? Like, what is the best bet for us to do to leverage the money that we have?
Pay off any high interest debt right off the jump.
Mm-hmm.
Anything that you have there, whether it's a car loan, credit card, clear that off. Um, Keep the money as liquid as possible for when an opportunity arises. So an S&P 500, that's great,
Mm-hmm.
but you also want to value stability with the amount of money that you have there. That is super critical to do. When a person is thinking about, and this is maybe a bit more of a business audience, a business owner or a person who's looking to be a business owner is going to know where to allocate that funds. But the low lying fruit is always just pay debt off.
Mm-hmm. That's the first
Right.
step. Pay off debt. Then once you've paid off the debt, do you like invest in your own business more, or do you leverage it in other ways? Like, what
Yep.
is the next step?
So, all right. So for me personally, I have a certain tier list. So
Mm-hmm.
the first place, if I have money come in that I wasn't expecting, is if I have any debt at the time, clear it off.
Okay.
That's where the money goes first. Clear off the debt. Second is investing in our own business. So, for instance, if I know that I can market out and I can get 10 more clients, I know what the revenue I can expect from that is. You want to invest that money where you have an asymmetrical advantage and you can value add. So, in if I had a podcast, that would be the time when I would make my background everything perfect so I could bring
Mm-hmm.
my podcast to the next level.
Mm-hmm.
Then after that, for me personally, I'm going to buy real estate. It's just what I know because I have an asymmetrical advantage just because I've done it for so long. And then after all of that, I'm indexing things. I'm doing an S&P 500, and it's not that I don't think people can make a lot of money other places or they're not really smart and can beat the market. I'm just not that smart at stock trading. So I hedge my bets and I focus where I am smart.
All right.
Okay.
So not draft picks, or what do they call them, or poly market, or
Those are rigged. Every one of those things are rigged. That's basic arbitrage.
what do you mean?
Yeah.
So like when I'm betting on
So
a sports game, I'm watching a baseball game, right? I think so and so's gonna win. The Dodgers are gonna win the series this year, and I put some money on it. How's
yeah.
that
So
fake?
basically, the what the bookmakers are doing is they're increasing their spread as big as they possibly can, and so they want to
Mm.
see if they have. So way to think about it. Let's say there's $10 million in gambling. 5 million goes to one side. 5 million goes to the other side. They're going to think, what can I do with those odds? So I encourage people to bet, but we're left with $200,000 to $300,000 of that right down the middle. So you give slightly, you just put the odds, skew them just a little bit this way and skew them just a little bit this way, and you can guarantee yourself as a bookmaker to make quite a bit of money. Um, I don't like to get into the ring with someone who is more experienced, who's more knowledgeable, and may have insider information. You will never see me sports gambling unless I'm in on the rigging of a game. Now, if my friends are rigging the game in some way, yes, I will gamble then. But unless I have inside information, there's no gambling for me.
So you're saying that these companies have that insider information, and they're being deceptive about the odds in order
I don't think they're
to.
being deceptive. This is just general gambling. It's same thing with blackjack. They
Mhm.
set it up so that the house wins a certain percentage of the time. They leave enough of an opportunity where people can think that they win, but over a long enough period of time, the house comes out ahead. You just never make a bet 50-50. You always push the spreads out. Have you ever noticed how you'll see odds where it says this team will win by 7.5 points? What sport has point 0.5 anywhere in there? So clearly that's how they're massaging their numbers.
Mm. Wow.
So that's like the squeeze for gambling, then
Absolutely.
you would say. Hmm. Okay. Th- It's more of a like a psychological part because they get you hooked onto it as well. They make you believe, they give you hope that you could potentially win, but in reality, it's always the house. Because when they give you that win, that one time you win, you get that feeling. It's like, oh, I can do this again. But in reality, you're gonna lose that
Yeah.
same amount of money you made over a certain period of time, and then they're gonna
And
come out on
people,
top.
I think when you see gamblers and when you see them, whether it's in real life or on TikTok, um, it's interesting. People gamble out of a good place a lot of times. Like they want to provide for their family and they see this as a way to get out of a desperate situation. There's a reason you're not going to see too many, you'll see them, right? But not too many extremely successful people going on some gambling website. It's usually people who are in a position where if I turn $500 into $1,000, this would greatly improve my current position. And those are people who lose
Mhm.
their $500.
So, what about that gambling influencer who I don't know if you've seen any of his videos before. I forgot his name, but he has like tattoos all over his face, and he goes out and he's banned from all of
Yeah.
the casinos. And um, how does this guy? He always comes out on top, and he's banned from all of Vegas basically. So what's
It's
this
not,
deal with this guy?
he's lying.
Does he have insider? Oh, okay.
No, I mean like you're not going into it because you believe that some guy with tattoos on his face, who out there believes a guy with tattoos on his face is going to outsmart quantitative analysts who set up the odds for all of this. Like, oh, this tattoo guy figured it all out. More than likely, he had too many drinks. He embarrassed himself. He got kicked out of every establishment, and now he's rebranding it as "I was banned." Not for winning, you weren't.
I guess I haven't done enough research on this guy. That's why I don't remember his name.
Well, I tell you
But
what, if he has all this money from gambling, he's free to come here to DC. We've got some really big mansions. He'll love it out here. Come and buy one. I got beautiful stuff for you. Come on by. I will publicly recant what I said and get you the most beautiful house of all time.
Wow.
oh god.
You got to be careful what you see online nowadays, because people are lying, and they have the fake lifestyles, and they say they own things when they're just renting things,
Unbe-
and
it's
they trick you.
unbelievable. And it's the funny thing is, I got a lot of followers, TikTok, Instagram, like 500,000 followers, right? Not like I'm the biggest guy in the world, but I'm not small either.
Hmm.
And I know what they pay us. It ain't that much. You're not you're not living. You could have 1 million followers. You're not living on TikTok money on a
Hmm.
yacht somewhere. I could tell you that.
So they're just faking it. They're like renting it for a day and claiming that we own this
You want
thing. Or yeah,
you want real num you want do you want real numbers on this?
pull it up. We're here.
Of course.
All right, let's
Yeah.
let's do real numbers. What do social media influencers actually make? It's not a little, but it's not a lot. So, this is a video which I don't know if your audience could see here.
Right,
It's
TikTok.
like
It's
1.1 million.
right.
Right.
There's the income that we get. Is it right? Is it up there?
Do you see
How
its
much? How much
size?
does that make? How much does that
I can
make
see the
for?
views, but I can't
Oh,
see
here we go.
a
There
bit.
you go.
Okay, $749.03.
Yeah.
For
For
a
the
combined, it was over two
a
and a
million.
half years of watch time for that video, meaning that
Wow.
that 2.5 years of human life went into seeing my take on that, and for 2.5 years of entertaining humans nonstop, 24 hours a day, you're being paid $750 some dollars. Um, what about this
Wow.
video? Here's another video. Here, a little bit better. Same
Let's see.
thing. You get
Yes, nine
$919.
nineteen dollars. Wow. Okay,
So
that's a
the
little
Yeah.
the
better.
guy
Oof.
posting on TikTok is not rolling in cash. All right, we're not. The only way he's rolling in cash is if he's selling you a course.
Hmm.
That's it.
Okay. Right. Yes.
And
Yes.
he's
And there's a lot of those people as well. There's like you're constantly bombarded with, oh, I got this great masterclass. I've got everyone apparently has a masterclass now.
I'm gonna
And
make a
it's like,
master class, and I'm gonna charge 1 cent for it or something. I'm gonna just make it out there just to undercut these guys
yeah.
because I see the guys doing the stuff with section. Like, there's these guys going out there talking about Section 8 rentals, like they have some magic formula. For like, I'm a freaking landlord. I know all these things, and it's like you follow code. You put it on the real estate market. Someone rents it with a voucher, and they're getting people to spend like $7,000 to get told you should have a positive cash flow on your rental property, and you should follow Section 8 guidelines. Like the insanity. Guys, you're gonna have to delete this podcast because just having this conversation right now, I'm gonna start charging $7,000. I really want to start doing it. I need I need your help though, guys. I need you to help me. We're gonna rent a Lamborghini. All right. I need you guys to come on out here. We're gonna rent 2 Lamborghinis. I'll cut a deal
let's
because
do
we're
it.
not gonna drive it, and we're gonna
Let's do
sell
it.
the real estate success course. You should buy properties that make money. That's. Do we just figure this out? Should I be like the one guy with the snake tattoo, be shirtless and all that stuff and flex? We could make a whole. I'll say a bunch of controversial things and then sell you a course. Okay, I could do that. I can make hot takes.
Wow. What is your hot
Oh
take?
my God.
Generally, what is your
Oh.
hottest take?
This hasn't been hot enough for you. I haven't given you guys enough hot takes already.
There has been quite a few hot takes. I wanted to ask you, speaking of hot takes, about like, okay, New York City with Mamdani winning and them freezing rent, and like making
Okay.
buses free and childcare free. Is that smart money or dumb money?
Whatever keeps people in like physically planted in New York so that they can keep their financial system going. I mean, money. New York is a place that you go to launder money. Like, why do you think they buy stuff on Billionaires Row and there's no lights on? It's a money laundering operation. So sure, just give it. I think he was talking about free buses and they pulled back on it. But yeah, sure, give them whatever they want to. New York lives on cheap money from the Federal Reserve
Mm.
and securitizing debt. And by the way, they're really cool people. I love New Yorkers. They are absolutely cool people. I love Central Park. But if they did not get those handouts from the Federal Reserve, they would be Philadelphia.
Really?
Whoa. Okay. I think that's a hot take.
And And then why doesn't the government just put it in Philadelphia then instead of New York? Why specifically
Well, it's the same. Well, it's the
NYC?
same way with anything. When there's a concentrated point, there's certain there's certain returns that like basically scales a certain way. It's the same way like Detroit. Take Detroit. Every mortgage company goes to Detroit right now. Why is that? Because that's where two of the biggest companies are, and there's all the underwriters, all the mortgage processors are there. And so it's become like an ecosystem. That's the word I was looking for, ecosystem.
Mm,
And in New York, if you are in private equity, if you are in the stock market, any of the businesses, and they're good business people, right? But the reason they're there is the ecosystem exists. Now, if they turned off the faucets and there was no easy money coming from Wall Street via treasury bills and issuance of debt, yeah, a lot of these companies wouldn't be doing so well, and you'd probably see them go elsewhere.
so your take is that it doesn't matter that they froze the rent, for example, like it has
No,
no
it's
effect.
pointless. No, you need certain people in a city to keep it functioning, and you need to do
Right.
certain things to keep those people happy so
Hmm.
that you can bring in the people who are actually doing the big money making work. No one on Fifth Avenue is stressed out over free buses or property taxes or rent freeze. That they don't care, and that's who New York is serving right now. For
Mm,
everyone else, we got to do what's necessary. Just kind of give them stuff so they can be kind of happy and they kind of keep the show going.
I see.
So why don't they just shrink New York to Fifth Avenue and then make everyone there who work
I
for the
you
people who
know
work at Fifth Avenue rich, or like
you know
famous or
I'm sure there's some Manhattan people that would love to do that one, but New York benefits greatly
Hmm.
from being as big as it is because if you want to have
yeah,
those
okay.
servers, in the Upper East Side, if you want to have like the best people, if you want to have the people cleaning your streets, you've got to have people in the city. There has to be that side of town where the workers are so that they can come over here and they can make the quality of life for the people who are bringing in the big money. Yeah, sure, it's from the Federal Reserve and all this other stuff, but they are legitimately bringing the big money in. And so you got to keep those guys happy.
Wow.
Okay.
So, about opportunities now. Where is the best opportunity to buy real estate in the U.S.? Let's say, out of all the states, is it better to buy them like on the West Coast or the East Coast or in one of the big cities or in a smaller town? Like, how should you, if you had to pick one place to buy a home, where would be the best decision?
You follow your economic opportunities. That's the core thing.
Mm-hmm.
So, and it's dictated by where your skills are most employable. So
Mm-hmm.
that's the surface level answer. So listen, if you're an actor, I'm guessing Los Angeles is probably a pretty good place to be.
Mm-hmm.
DC is probably not the best place to be an actor unless you're a politician. Now, if we're talking
Yeah.
about what do you want for quality of life, I mean that now you're coming down to personal preference,
Right.
right? If you're working remotely in America, you could go to West Virginia, get a big old house for not so much money, but you're going to be on a little island by yourself, so to speak. Um, you're kind of, if you want the urban benefits, like, you can go out there, there's a million restaurants, you got to stay in the city areas. But if we're talking about pure investment, so let's skip all this. Let's go pure investments. Where would I
Yeah.
be investing in real estate? Where am I investing in real estate? You want to go lower middle income areas and you want to buy apartment buildings and you want to buy small little houses that you can rent out either through Section 8 or you can just rent it out to local individuals. That's the core of where I would go. So a lot of investors are going to Ohio, and like almost as a rule, the more like boring a place sounds, it's almost better because it means that people aren't buying there with excitement. If you want to come in DC and make cash flow, it's hard
Right.
because everyone wants to be there. They bid up the prices to the point that you can't make any money.
Mm-hmm.
No one's thinking about Scranton, Pennsylvania. No one's thinking about someplace out of Dayton, Ohio. So you want to be in the boring areas where there's predictability. That's my opinion on real estate development. But to answer the question a third time, where would I buy right now? I'm cold. I buy in Florida, Tampa, maybe Clearwater, beautiful beaches. I'm tired of being cold, guys. I'm tired of being cold.
That was a very stark, description. You went from Scranton, Pennsylvania to Tampa, Florida. That's a big jump. But so, and does that rule apply to any country? Like, would you apply it anywhere you go for, something predictable, lower middle income regions?
No, no, because there's other factors. So America is an established real estate market. So the value plays that I have in America are different than when we're investing in Ghana. So for instance,
Okay.
when we're investing in Ghana, the proximity to the build out of public infrastructure is one of the key metrics you're looking at. And you also want to look at when you're investing is whether or not future buyers can get a loan for that property. So in
Hmm.
a market that doesn't have a fully developed financial system like Ghana, banks tend to only lend in planned communities. So you can go to montgomerygh.com and see our beautiful planned development. But when they see, but so when you're investing, as it becomes cheaper and cheaper and easier to borrow money, those are the areas that are going to go up in value. Whereas that small house in the middle of nowhere in Pequasi, the bank probably won't lend money on it, and so it's difficult for the prices to go up. But
All right.
in the planned developments, that's just how it can be different. And you have to look at every area on an individual basis. You have to look at what is going to impact rent prices, equitable value, and future liquidity.
So that's really important to mention. What are those variables that someone wants to look at when they're, purchasing a property that they want it to grow in value and not stagnate in its price? What are the
All right,
variables?
you go off of percentage of income analysis. You have to go to income. The typical real estate market in America is going to push prices for resale to 35 to 40% of the median income for that area. There's some
Hmm.
variability in different parts, but you kind of have to figure out what that number is. Now, if you have an area where people are putting, say, 28% of their income into housing, that's going to be a good area in terms of long term appreciation because the markets just haven't adjusted to it. If you are if you can see where future industries are developing, that's a big benefit. Even in DC, people underestimated Washington, DC 10 years ago because they thought of us as a political town. But once all the tech companies and pharmaceutical companies came in, our values went up 50 to 60%. So it's just kind of reading the tea leaves and knowing where the income is coming.
Mm.
Okay. Okay.
So to
So,
be
yeah,
good at real estate, you need to understand other sectors of life.
Yeah. I mean, if we're talking about to be good at buy and hold,
mhm.
you not only if you want to look be an oracle, look at a crystal ball. That crystal ball better contain income information and future job growth.
Do other factors such as maybe the development in that community like affect the price or but not too much? That's not an important variable.
Well, within an economic zone, there's going to be premiums paid for different features, and most communities end up fragmenting into this side and this side. So one side will generally have all the good schools, people will flock to this particular area, and then one area becomes underserved, and they just kind of let the schools fail. That's true with every county in Maryland, DC, Virginia. They all kind of go through the same cycle. And so you have to make a value play there. And but it still follows the same percentage of income analysis. So if on the bad side people are putting 28% of their income into housing and in the good side they're putting 40%, well then this side has room to grow and this one doesn't. But if they're reversed, then you invest on the good side.
Okay. Okay. That's fair. You just have to really analyze that income. Is it, how do you for you, how do you come by those statistics like that information and because like here in
Federal Reserve
Saudi
does
Arabia
it
obviously
all.
it's different.
No, it's government data. They run analytics on all of this. If you want to know where the income is relative to the price, it's not hard to do. You can look at what the current interest rates are to buy a house, what the median sales price is, what are people making in the area,
Hmm.
and you can create your ratio that way. Because
Wow.
I just believe that people are going to perpetually get themselves in more and more debt, and in over 20 years, I have not been wrong with that take.
Oof.
All right, Ali. Do you have any more questions?
No, but I would love to hear one more hot take on you about that. So let's say I'm going to Coachella and I'm like, oh, like I'm just a normal guy. I'm not a rich guy, but I get to go to Coachella. But there's this app where I can borrow $1,000, and me and my friends get to all go to Coachella and stuff like that. Is that a good decision? Because listen, money comes and goes, but Coachella and Justin Bieber, that's a once in a lifetime memory.
Well, listen, if this is the peak of your existence is going to a Coachella, if this is the only thing that'll make you go get into debt and go to Coachella, go have some fun with it, if that's what brings you personal satisfaction. However, I would perhaps suggest that there's a lot more fun things you could do for $1,000. If you're in Los Angeles, you could buy yourself a surfboard. You can go out there. You could spend some really quality time. There's a lot more stuff to do. Coachella is mainly for that kind of stuff. It's for girls and rich guys, for them to pair off. That's why those things exist. They're not for regular guys. So if you're a regular guy and you're paying money to be in this space, all you're doing is subsidizing young, beautiful girls going to rich guys in the VIP area. So I don't know. I would subsidize that. Maybe the music's good. I don't know. I'm not my scene.
Um, okay, so I'm gonna end the podcast with a few quick fire questions, and let's see how you respond to those.
All right.
First one is, will gold reach $7,000 in 2026?
I can't speak to that. It'll eventually hit that point based on the inflation of our currency, but I'm hesitant to predict the gold market because I feel it's highly manipulated.
Okay. Um, so we just lost Ali for a second, but he'll be hopefully coming back soon. Another question, is Trump good for the economy or not?
Whose economy? He's good for my economy. I don't know if he's the best for the regular person, but it
Okay.
and it also depends on how we analyze the economy. Are we just saying did GDP go up? If we're doing like a sophomoric analysis of does GDP go up? Yeah, Trump's
Hmm.
been good for GDP. Has the savings rate increased under Trump? Not really. Have certain industries benefited? Yes. Have certain industries been hurt? Yeah, also. So it really depends on where you situate yourself within the country.
Maybe we can make it simpler by asking the average American individual.
No, of course, no, not at all. But he did. But to be clear, and not to offend all of our Republican friends out there, it wasn't much better under Biden either. And it's been the issues that we face in society are not government based; they're debt based. And so when you have the Federal Reserve printing a whole bunch of money to support the financial markets, and it's leading to the dollar going down, and you restrict housing development so that people have to get bigger and bigger mortgages. Regardless of what numbers say on paper, regardless of what happens with the stock market, people as an aggregate are not going to be better off. And up to this
Hmm.
point, I haven't seen a president in my lifetime that has addressed this. And so
Hmm.
I would be equally as critical of Biden as I would be of Trump. So you guys keep your comments to yourself if you're out there saying I'm a Trump or Biden person. I'm a me person. I'm playing the market as it's presented to me.
Fair, fair. Whatever, taking the opportunities one step at a time. That's how it should be. Um, Jim Cramer is saying to buy now. Is he right? Or
I believe the Kramer index is you do the opposite of whatever he says. So if Jim Cramer, I didn't see Jim Cramer. If he's saying to buy, and guns to my head, I'd say sell, sell everything.
okay. Um, there's Wall Street is currently on edge. There's a lot of speculation going on. Do you have any comments on that? It's like, yes, I know this is not really a quick fire question, but maybe a quick question, a quick answer on this one.
Well, I mean, on edge in what way? I mean, like I've never seen a person in the investment world who's not on edge 24/7 their entire life. So I can't really comment on that because I assume they're on edge all the time.
Fair enough. I think it's more based on the political situation, with the U.S. Europe, and then there's also
Oh,
the current
they must be
Iran
excited.
regime change.
Oh, they must be excited about that. War is great for business. You know how much money those guys make when there's war and there's trouble in the world. They have to issue bonds out and it lowers interest rate. They can then borrow to buy more assets. Oh, they're going to be excited. If there's international conflict, they are happy.
That's true. That's true. Um, the one final question. This is more of like maybe on your personal work. What's what's the best way to pitch a sale for real estate? What's your best pitch?
For someone to work with my company or to work with my mortgage firm, it's depends on the individual. But if you want to come to our mortgage company, we're the only company with rates under 5% in the entire country right now, to my understanding. That's my pitch there. And for our real estate firm, well, I would say that we generally have the best international team in Washington D.C. by far. Our my real estate brokerage, I mean, it's just a factor of volume. We do more than pretty much anybody else here. So,
Fantastic. Bradley, thank you so much for coming onto the show. Is there a final word that or final message you'd like to share with our audience? Something you'd like to put out there before we finish?
well, interesting question, because what can I say that's going to stick with everybody? I've decided I'm going to give something that's going to be the absolute greatest benefit to them, and they're going to like listen to me, and they're going to say, no, 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 it's not. When you go to buy a house, shop for your mortgage rate. The difference between getting locked in at 6% and 5% on a $500,000 loan can be as much as $150,000 from your lifetime net worth. You can always negotiate down a mortgage rate. You can always do it no matter what they say. I could say that someone who owns a mortgage company. You can always negotiate. And that's not going to click. That's not clickbait. You don't get to clip that one out and it will get a million views. But someone who listens to this whole podcast, 3 years from now, they're going to remember that I said it. It's going to be back of their mind, and they're going to save a lot of money.
Fantastic. Bradley, I mean, thank you so much for all of your insights. Honestly, it's like just gold coming out of your mouth, and hopefully that we'll see that grow as well. Thank you for being on the podcast. Thank you guys for watching, and we'll see you guys later. Peace.